Well, happy Monday, everybody. Welcome to our Straddles and Strangles webcast. I'm Connie Hill. Happy that you would join me here today. You know, this particular strategy is something that many traders like to use in earnings season. And we are in the thick of earnings season, and we're going to talk a little bit about maybe stocks that might be ideal to use for these strategies and which stocks might not be ideal, and maybe which stocks used to be ideal and just really aren't anymore. Kind of talk about that a little bit. I am joined in the chat by Brent Moores, good friend, fellow coach, very knowledgeable trader. He has so much experience in the markets. Between the two of us, I think Brent has at least 25 years. And I've got 20 plus years, so you're in pretty good hands. As you have questions, go ahead, ask us. We're happy to answer those questions for you. I'll keep my eye on the chat, but if there's some things that Brent might need to answer for me, I'll have him do so. But we do want you to get your questions answered. And if you're listening to this on the archive, like a lot of you do, when you have questions, go ahead and put them in the comments section, because I go back and read those throughout the week. Make sure that you get your questions answered quickly as well. Now, I hope you're following me on X. I'm Connie Hill CS. Make sure it's exact, because I've seen some imposters out there lately that are variations that are kind of look like Connie Hill CS with extra letters or spaces or underscores. So just make sure you're following the right one, okay? Brent Moore CS. Brent would love you to follow him as well. It's free, it's easy. We'll put little nuggets out there throughout the week, things that we might be noticing going on in the market that we find interesting, that we think you might be able to enjoy as well. All right, let's go through our disclosures and let's lay out the agenda. Options carry a high level of risk and are not suitable for all investors. What we talk about today is it for education and information. Don't consider it a recommendation. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. Even though an in-the-money amount option has a higher risk of being assigned early, we'll be using the Paper Money software application. It's for educational purposes. I think it's a fantastic platform so that you can practice whatever strategy that you happen to be working on. Short options are not assigned early in the Paper Money platform, so we like to point that out, that that's going to be one difference. Investing involves risk, including the loss of principal. Past performance is no guarantee of future results. All right. Let's actually, I take that back. I wanted to actually show you something, and so I'm going to unhide it. And that is just some upcoming events that if you're interested in, sign up now because they fill up early. Anaheim Market Drive event, one day on a Saturday. Houston is December 11th and 12th with an option strategy and technical analysis workshop. Technical analysis on Friday, options is on Saturday. And then the advanced option event in Miami is going to be the last one of the year. So take advantage of that. If it's something that can work in your schedule, you can get there fairly easily. We really are going to cities that are the most populated, where we have a lot of Schwab clients. So if you live in Lehi, Utah, like I do, they're probably not going to come here. Okay, so that's why I say if it's easy for you to get to it, take advantage of that. All right, let's hop over to my Paper Money here. And in my Paper Money account, I've got Apple up. Now, Apple announces this week, and there's going to be a lot of eyes on Apple. And historically, in the past, Apple has been a decent mover, but not so much recently. Okay, so I want to point out a couple of things to you here. One, something that will be helpful for you to have is this market maker move on the chart. Okay, so it's a script. You put it in to open shared items. I'm going to go ahead. I'm going to share that with those of you that are here live. Remember, anytime we share scripts with you, they're not guaranteed as to accuracy or timing. Okay, and what does this do for us? Well, from the trade page, we have this little thing called the market maker move, and it sits up here, and that little icon is an MMM, okay? And this is basically saying for the event of earnings, the expectation is that the stock is going to move plus or minus $9.06. Might go up, might go down. We don't really know, right? They come out, we all get to find out at the same time what their earnings are and the financials they submit, and then the market will move based on that. So that little $9.06 move from the script, let's get back over here, will show up here on the chart. Okay, so it's showing a plus or minus move of $9 and whatever it is now, 3 cents. And so it'll put it in here and show it to us. And then I've got it showing up here right there where it says 3.4%. Now, do you think 3.4% is a pretty big move or a small move for an earnings event for Apple, behemoth stock that it is? You know, it used to be that Apple was a really big mover, but right now it's not really projecting to be such a big move. 3.4%, I'm going to say, is a fairly small move. So it might not be a good candidate for a long straddle or a long strangle. It might be more of a candidate for a short strangle where we're not expecting a big move, but want to sell some premium and then don't expect the stock to move very far. So it might be a better candidate for that strategy. So the short strategy versus the long strategy. A couple other stocks that we typically have been big movers. Meta. Meta typically has been a decent mover. Big gaps up and down if we go and look historically at years in the past, but more recently, not so much. And so again, here the market maker move is priced at $43.66, which is a big number, but percentage-wise, I'm going to say that it's a little bit of a move, but not tremendous. Okay, and you can see out here these yellow marks. That's where it's expected to move. Now, visually, you might look at that and go, I don't know, that really looks like a lot, Connie. Let's come out here to a 1-year chart. So we have a little bit more to our view as far as where the stock has been in the last year. And so even though it might look okay, and I'm going to say it maybe is if we had like a small move, medium move, large move expected, this would probably fall into the medium move expected. Okay. Today, we are going to do long strangles. That's what we did last week, but my paper money had a glitch. Darn it. My paper money did a really weird thing that I have never seen happen before, and I called into our tech support people, had them take a look at it. It kind of reset itself, but not totally, okay? It reset itself in that it wiped out all my existing positions. So last week we had put on Apple to take a look at. We had put on Intel, and we had put on Philip Morris PM, which are due to announce actually out in November, and it totally wiped those out. Okay. The strange thing is when you reset your paper money account, and some of you may have done this before, and you might have done it on accident, come over here to the monitor tab, go to any position, and those are the only ones left in here that I just put in last week. And if you do a right mouse click here and you hit reset all positions, it wipes everything out. And it even wipes out your trade history. So what's interesting with this little glitch that mine had is it saved my history, okay? Which is really a little bit odd that it did kind of like a partial reset, but not a total reset. We're not really sure what happened to it, okay? So we cannot follow up on the trades from last week, basically, is where I'm going with that. We hadn't announced yet, but we're not able to track them. So that's why we're going to do long straddles or strangles again today. All right. How do you put on that market maker move? Let's show you how that works here. That's the question coming in. If you come up here to your setup, click on that gear in the upper right-hand corner, select on Open Shared Items, then you can paste the formula in here. Okay, so I'm going to grab, actually, let me cancel that for a minute. I'm going to grab just the formula starting with the exclamation point. Some of these, you can see I've got written down the whole URL that has this TOS.mx/, and then it's everything over from to the right of the slash. Okay, so I'm going to copy that. We'll come up here to setup, open shared items. Go ahead and paste it in there. If you're listening to this on the recording, you might need to pause it here and kind of zoom in and see what this is. All right. Hit preview. And then I've called it the MMM on the chart. You can call it whatever you want. You can keep that. You can leave it that way. Mine's called maker market move on the chart. And then go ahead and hit import. Now I'm not going to hit import because if I do, it'll bring it in again. And it kind of clutters your accounts if you bring things over multiple times. So one key here is remember what you call it. Remember what name it comes in as. Okay, so let's go ahead and I'm going to hit cancel instead of import, but that's what you're going to do with it to get it. And then what you do to see it on the chart, you just come over here to your studies. And I know mine is called MMM. And so I have a couple of different ones. So what I'm using here and sharing with you is this MM on the chart. You bring up the study, add selected, you bring it over, and then it displays on your screen like that. All right. Any other questions about that? Oh, thank you, Brent. Brent has posted in the chat for those of you that are here live. It looks like a short video showing how to add scripts. So thank you for doing that. For those of you that would like to maybe go through it a little again, maybe at a slower pace, we could do that. All right. So Meta typically has been a big mover, but I'm going to say, like I said, small, medium, large, it probably falls in the medium category. Something else, Amazon typically had been a real big mover. And you guys know these are the ones that are headline stocks, right? Kind of falls into the medium category here. And I chose not to use them as examples for us today because I wanted to show you how to focus on ones that make even bigger moves. Okay, so the first one we're going to start out with here today. Oh, and I have a bunch of juicy ones here. Let's start with this one, Roblox. Roblox has made some big moves in the past. And one way you can determine that is you can put up a 1-year chart or sometimes even a 2-year chart is helpful. And you go back and see over the earnings periods, how much have they moved? So let's just do that with Roblox. We won't do it with all of them, except I want this one to be 2-year daily. So let's adjust that. It's going to be a little bit busy, but I'm just going to zoom in on each of the earnings periods. Was that a big mover? Oh yeah, that was a big mover. Nice gap up there. And let's kind of zoom out a little bit. Let's take the next earnings period right here over on the right. Was that a big move? Yeah. And so you can go back and historically you can see, well, what has this stock done at earnings time? Oh my goodness, look at that gap. We could drive probably 3 semis through there that gap is so big. So these are the kind of moves for a long straddle, long strangle that we really want to look for. Again, another big gap up. And so this one historically has been a decent mover for us. And even more so recently. Let's see, this one is July. So that was July. It closed there, gapped up, clear up here, and then fell the rest of the day, but still left a pretty decent size move there. So that's what we're looking for. 13.56 of those stocks that we're going to be reviewing here today. This is the one that has the biggest market maker move. And for those of you that maybe aren't as familiar with it, basically what it's measuring is how much implied volatility is priced in the at the money options for the event. Okay. And so when we know that something's got a lot of high implied volatility priced into it, the expectation is that it's going to move big and we want these guys to move big. Okay. As you have questions, go ahead and ask those. All right, let's go over here to the trade page. So we come over to the trade page. Here we see that market maker move 17 points. What does that say? 7.63? See 17.63. It just pulls that data so you can see it on the screen. Now let's talk about the difference between the market maker move and what these numbers are over here on the right-hand side. These guys announce earnings on Thursday before the market opens. No, it doesn't. After the market closes. Thursday after the market closes is when this guy is going to announce. And so the implied volatility for that event is going to be priced into these October 31 expiration options. And we can see how much excess implied volatility we've got here. 169% implied volatility, which is huge. Then the next one out, which expires just a week later, is 114, which is still, these are both incredibly large numbers, but we'll see what a big gap there is here. You know, basically what about in the neighborhood, 24, 34, 44, 54, 64, 55%-ish more implied volatility priced into those weeklies. Okay, so super expensive. And so sometimes people might say, well, maybe I'll go to more of a selling strategy with hedges, like maybe an iron condor or some other things. But because our class is straddles and strangles, that's the only thing we're going to focus on here. All right. Now, knowing this, would you be more inclined, and you can answer this to your computer screen, you can answer it in here, would you be more inclined to do something this week where the options will announce or later? Okay. This one, during the week, see how this says by options expiration, the expectation is this stock is going to move $19.05, either up or down. We don't know the direction, which is a big old chunk. I mean, a big old chunk of that market maker move. But it's Thursday after the market closes. And so this number will go through expiration Friday. Okay, so that's why it is a little bit bigger here. And we can decide, well, how far out do we want to go? Now, with a straddle or strangle move, we're expecting a big move on the stock, and we'll probably take action shortly after the news. But sometimes it's helpful to have a little bit more time and not be pinned so tightly for an option that's just going to expire the next day, and you're basically in the trade a real short period of time. Okay, so Kevin says, yeah, I might go for this week. So they're depending on your approach, or sometimes you might go out a little bit longer. Now on this one, unfortunately, we don't have tons of open interest. Now this is actually not too bad. I was planning on doing the November 21s out here, but maybe I'll rethink this. Maybe let's poke around in here in the November 14s. Was it the 14s I opened? No, it's the 7s I opened, and those actually, this open interest is pretty decent, but I want a little bit longer time. Okay, so that's why we're going to go out to November 21. Now, there's no right or wrong as far as, well, which ones do you pick? It just depends on if you maybe want the stock to have the ability to move and be able to capture some of that move after the earnings announcement. Okay, so that's why we're going to go out a little bit further. Time decay is a little bit less, although 25 days left options expiration. Time decay will still be an issue, even though we're buying these long options. Ricebird said, I'm more of a minimum of 2 weeks, so you like to go out there a little bit further. Yeah. And there's, again, no right or wrong. It's more of a comfort level, and it may depend on how much open interest you have. That's really something that's forcing our hand here, is the amount of open interest and wanting the stock to have some move after the fact. All right. So I'm looking here to go out of the money. And let's look here. Our at the money option right now is going to be the 130s. That's nice. That's a nice clean number there. So a straddle would buy the at the money column, put Strangle, we go out of the money, and there's no, it's not like you have to go out 2 strikes out of the money or 3 strikes out of the money. You kind of, it's a waiting game, and weighing, I should say, not waiting, weighing game. You're trying to determine, how big of a move do I think the stock's going to make, which we have the market maker move. But we also know for our break even amount, even though, say, for example, if we came out here to the 127 or the 126, it's the premium isn't as much as our, say, the 130 would be. But remember, we have to tack on that amount to our strike price to get to our break-even point. Okay, so by going out of the money a little bit further, it does kind of stretch out our break-even point a little bit longer. Does that make sense, you guys? All right. 125 has a lot of open interest here. That's $5 away. If we're expecting it to move 17 bucks, I don't think 5 out of the money is that bad. Let's cue this one up. We're going to do 125 on the put side. I'm going to click on the asking price, and I'm going to hold down my control key so that I can put on the call side as well. Now on the call side, we are going to go out to 135. So we're going to go out 5 directions both ways. Okay. And again, this is where we have lots of open interest. So the bid-ask spread is a little bit more favorable. And as traders, we want it. The tighter the bid-ask spread, the better for us, right? All right, so let's go ahead. Let's queue up this one now. So we've got 125 on the put side, 135 on the call side. And this is an expensive trade. It's going to cost us around $18 to get into this trade. It's going to cost us $18. And what we need to plan on is probably losing an entire side. Like once the news is out and the market moves and the price of the stock moves and implied volatility comes crushing out, we're probably going to lose either the call or the put for the most part. Ideally, we could sell the loser quickly and try to salvage something out of it, but just know we're kind of sacrificing it. So it's good here. Interesting. Still $18 is pretty close to that market maker move. Interesting, isn't it? All right. Let's look at this on a risk profile for a moment. We won't look at it very long. Come over here to our risk profile. And what we're going to do is we want the expiration date of the options up here. So 11/22 is perfect. We're going to come onto this menu and we're going to say set slices to the break even as of that date. And then we're going to have to do some fixing of our chart here. Let's do this. Let's come up to here. There we go. That's a little bit better. And I'm going to reset this again. Set slices to the break even one more time. All right, that looks cleaner. That looks better. Okay. Now, as we look at this, it's like, where is our profit area? Well, our profit area is beyond our strike prices, right? So 135 is down here, 125 is down here. So that's where our maximum loss is. Come options expiration is basically what we're buying it for, $17.95 at this point. Okay. And where does the thing go profitable? Well, here's our break even. And so as it makes bigger move beyond that, that's where one or the other potentially could be profitable. That's what we're looking for. Okay. P. Anderson says the bottom date is wrong. This actually should be our date today. So let's go update that. That'll change things a little bit. Thank you for that. So it changed it a little bit, not a ton. All right. But that's the general idea is, yep, we wanted to move big on this one. So we'll see what happens. These trades, I'm going to tell you, are speculative trades. Straddles and strangles, long, short. They're speculative trades, meaning that we're doing it for a specific purpose, for a specific event, but we really don't know what the outcome is going to be, which is why we're doing one as a bullish, one as a bearish, whichever way the earnings move it. All right. So let's go ahead. We're going to send in Roblox. And again, these earnings are going to be Thursday after the market closes. So, you know, on Friday morning, Halloween, you're going to be dressed up in your Halloween costume, checking out what the news is on this particular earnings announcement. So we'll put this in our straddles and strangles grouping. All right. Let's take a look at another one here. What I want to do with our series here is go through each of these strategies one by one, and then we'll do some mixing and matching. Okay, meaning for certain trades, maybe we'll identify this is better for a long straddle or a long strangle, or this one's better for a short straddle or short strangle. Okay, next one up. Let's look at this one. This is our next biggest mover of the stocks we're looking at here, Wayfair. And again, we could look historically and see what happens over earnings. A little bit of a gap there. But the way the stock's moving right now, they're really pricing in a pretty decent move. 10.86%, which translates to about a $9 move, $9.36-ish move. These guys announced, let's change this back to a 3-month chart so we can see this a little bit closer up. These guys are going to be tomorrow before the market opens. So this will be the one that we will get some results back the quickest on, right? We'll get to see what happens here. And as we look at this, this is a pretty big move. Out here, the stock really hasn't been that high for, I don't know if it's ever been that high, actually. And then where the market maker move is down here, it actually was down this way more recently on this little pullback that it had. So that's what that one is looking like. Okay. Big move? Yes. If it's small, medium, or large, we're going to throw this in the large category, 10.86%. Now, what would we expect to see on the options here? One, let's change one of our studies here. Let's make this be implied volatility. Bring that over. And I'm going to make it a little bit fatter here. Would we expect implied volatility to be going up or going down as we go into earnings? Well, let's hide our ISR right now. And there we go. Let's see what things look like here. All right. We would expect it to be ramping up usually, right? And so it looks like it did for a period of time, although like as it comes into this last week, it looks like it's actually dropping, which is a little bit interesting because normally we expect it to be moving up and ramping up there. Let's see. Let me answer a couple questions here, but back on Roblox. Is it better to enter the Roblox trade right before earnings or today? It could be either way. We expect implied volatility to run up prior to earnings. So on Roblox, would expect implied volatility to run up going into earnings, which means the options are going to be a little bit more expensive if you wait. But not guaranteed, because look at this chart. This one, the implied volatility actually has dropped a little bit as it's going into its earnings. So maybe somebody that bought it out here when implied volatility was a little bit higher, somebody that bought it out here would have been expecting implied volatility to continue to go up, and it didn't, which would be maybe a little disappointing, but it's kind of how it works. Oh, Kevin says, did I study this market maker move script? I did, and it is out in the chat. It looks like Brent reposted that for you. Thank you. Thank you for doing that. Okay. All right, let's go back to our chart here. Okay. Wayfair has weeklies. And we can see at the end of this week, it's expected to move 10.49. So 937 of that just for the earnings announcement, and then maybe a little bit more until it expires. And look at the implied volatility priced in here. And so when you see that, it means expecting a big move. All right, we're going to have to use on this one as well. We're going to have to use the November 21 options just because they have more liquidity. They have more open interest, and we need to have open interest, right? We don't want to be being this contract here with 2 open interest and 1 today, right? We need there to be some contracts to exchange with. All right, let's go here. Since we're doing strangles, we're going a little bit out of the money. So our at the money is going to be 86. That's where the stock is right now. So on the put side, it's going to be a little bit out of the money. Let's see what choices we might have here. Open interest might dictate this a little bit, okay? Maybe 85 here on the 275, which is going to be in the neighborhood of, actually that is just 1 out of the money. On the call side of things, really where we see lots of open interest is out here about 87.50. Okay, so same thing here. I wish this bid-ask spread were a little bit tighter, but the one thing with paper money, usually when you put it in, it'll put it in at the midpoint area so that it's not taking the extreme low or the extreme high, kind of the midpoint between the bid and the ask. So let's go ahead. We're going to do click with my control key down, 87.50, and then we're going to do the 85. So in this case, they're not exactly spread the same amount apart. One's $1 difference out of the money, and then the call one's $1.50 out of the money. Sometimes that's how it works. And there's nothing that says you absolutely have to be the exact same amount. You don't have to do that. Something that people will watch for, though, is they might say, well, I want to pay about the same-ish for the call as I do the put, simply because we know we're going to lose one of them. And so it's nice if they are fairly evenly matched. So 655 and 77.40, the call's a little bit more expensive, but we are going out 50 cents more out of the money. Okay. All right. Thank you for helping me with that, Brent. Reposting that information out in the chat. Now, Prakish says, how do we know past history IV and dollar adjustment predicted and follow the pattern for constancy on projection? Basically, you go back and look at the chart, just like what we did on the very first chart of Roblox, where we were seeing these big moves. We went out actually a couple of years. I said we won't do that on each of the trades that we look at here today, but I did want to do it on that first one to show you. You kind of go back and you look and see, is it a big mover or not? Now, somebody's saying, hey, Hiran says, Microsoft and Meta have earnings this week. Usually, and he says he or she says these are good to move big either side, usually, but not right now. Okay, so historically, yeah. So let's go ahead. We want to get our trade in here. We're going to hit, took it here at the midpoint price, 12.93, so that's good. And then we're going to send it to our straddles and strangles grouping. All right, good. We got filled on that pretty quickly. Let's see, this one isn't filled yet. Let's adjust our price here. Maybe just go up a little bit because I want to make sure that we get filled while we're in the class together. Let's go for an even 18, see if it'll fill us on that. There we go. All right. Microsoft and Meta, we did look at Meta first thing earlier today. And Meta usually has historically been a big mover. Not so much right now as far as what they have priced in. I say I would put this in the medium bucket. Small, medium, large, as far as moves go, I'd put it in the mediums. Okay, Microsoft. Got to get rid of those extra ticker symbols there. Microsoft, 4.32%. Okay, so on the chart, it's looking kind of big, but percentage-wise, not enormous. Okay, but could you use them? Absolutely. If it's something you're like, well, I kind of like that size of the move, great. You could do it. I'm trying to show you some that have really huge moves expected. And we don't really know if it's really going to move that far, right? The market doesn't really tell us in advance. It doesn't really work that way. Okay. And OCN says, when you're buying, wouldn't you want to be in the money instead of out of the money? For a strangle, a long strangle, which is what we're doing, by definition means out of the money. Okay, so if we were looking, let's look at one more example here real quick. A couple of really good movers, or anticipated good movers. Let's come over here to the chart. So this is another one that's priced into the at the money options, a 10% move. But by definition of a strangle, okay, looks like maybe the at the money strike price on this one would be $29.50. So out of the money, just by the definition of a strangle, is what we would do. Now, there could be some variations of how you might want to do it. If you do it right at the money, that's going to be called a straddle. Okay, but this week we were working on our strangles. Okay, so possibility here, SoFi could be one. Another one that could be a possible big mover here would be Roku. Roku is going to announce on Thursday before the market opens. So it's got a little bit of time this week. We can see how much implied volatility is priced in here, 141% for the week that announces, so this week, then dropping down to 97%. So we've seen huge implied volatility priced in here. Now, this one, we're going to use the November 21 options simply because they have the most liquidity, they have the most open interest, and we're looking to maybe see if we need to hold on a little bit longer past the earnings announcement in order to make the kind of move that we might need it, that we might need the stock to make. Because maybe what if it just moves a little bit, say the first day, and you're kind of like, oh, this isn't really telling me if it's really likely to go up or down. But if we're doing the October 31st and we need a little bit more time, kind of makes it difficult on us, okay, for that to occur. So sometimes in selling strategies, we might go with the ones that expire right then because we're looking for the vol crush. Depends on the strategy that we're looking at. Okay, so this one we're going to go out to November 21, and we're going to do the at the money here looks like 98. So it's nice we have these single dollar increments here. So 98 would be our at the money. So any one of these would be our out of the money. That would be for our strangle. We're going to go with the 95 here. We've got 307 contracts. That's a nice, decent number. Let's get on the right one, 95. And then on the call side, kind of going out about a similar amount. We're going to go out to 100 here. And they're going to be priced almost about the same, which can be helpful. 680 and 685 on that. Okay. Again, we're not looking at charts for timing, none of that. Okay. We're going to put this in, and then we're going to have to watch them like a hawk when the earnings comes out. Let's talk about managing. Now, suppose there's a couple of those that don't announce till Thursday. If implied volatility ramps up and it helps both of the options, and I've seen this happen before, where both the call and the put are profitable, sometimes you might, if it's a good enough chunk of a return, some people might decide to just get out before the actual earnings takes place. If you're like 30% or 40% or 50%, and you're like, wow, this is great. Why even hold it over earnings? Because I've already was able to let it make a move. And if you buy options out here further away from when they actually announce, then it's a little bit easier to do something like that. Okay, that's what we were attempting to do last week before my paper money had its big old glitch. All right, so we got these 3 trades on that we're going to be watching that announced this week. I hope you guys are following us on our YouTube channel, because it makes it so much easier to find our content. Most of you, I think, probably have become subscribers by now. If not, because we have new folks joining us all the time, click on that little subscribe blue YouTube button down in kind of the bottom right of your screen below my chart. You can click on that and become a subscriber. And then when you do, man, it makes it a lot easier to find our content, right? Because here's our Trader Talk Schwab Coaching webcasts. We have different playlists. You can see what's coming up. Well, some things that came out recently. So Brand out in the chat, here's one from last week. I think this is on Thursday, Condors, Calendars, and Butterflies. That was his most recent one. And then we were looking, this is the one that we did last week, Straddles and Strangles. So you can find our content. You can go out to these playlists. We also have some short videos that we're working on for you called bite-sized content. Okay, so I did some bite-sized content last week, which was a quick tips how to customize your monitor page and your position sizing area was the one that I did last week. Okay, so become a subscriber makes it easy. Now, I did not see a survey out here today. If we did, Brent will repost it again and let us know, but I think we did not have one today. Let me see. I think we've got a couple of questions here to answer that I want to make sure that we can catch as many as we can. Mary Barnes says, is there a script to scan based on MMM for larger percentage moves? I think we probably could incorporate that into a scan. It's not something that I have done, but I think that's a great idea. Actually, I'll show you something I tried to do earlier is I pulled up the NASDAQ 100 and I added on here as a column the market maker move, but it didn't match. So I've got to go back and see what does this market maker move, what is it doing? Because it wasn't bringing in these values. Okay, so I like the idea of that. Yeah, which ones could there be? The other thing I started doing is I started a watch list so that we can, as we're building over time, we know which ones are the big movers. So we're kind of doing that this earnings season. We'll be making a watch list of some of those that we'll be adding to, I called it straddles. Where did it go? S&P. So maybe it's, should be in here. Oh, I'm in the public. That's why I'm having a problem. Straddles and Strangles right down there. So I just started a watch list that I'm going to be putting different ticker symbols in there that are the stocks that make the big move. So then as we go forward, makes it a little bit easier for us. Greg says, I need to understand why you buy when IV is high. It's just the definition of the trade. When we're expecting a big move, that's how we tell its implied volatility is high. And so the expectation of movement is big, and that's where straddles and strangles are useful and helpful. All right. I think Brent had to answer some of those other questions. Appreciate that, Brent. All right, you guys, you ready for this? We're going to watch it this week. And the way that you get better at these, the way you understand the strategies and how you like to trade them is by practicing in your paper money account. So I'm going to encourage you, whether it's these trades or other ones you're interested in. There's a lot of big ones this week. Do them in your paper money account and see what you learn from it. See what kind of preferences you might have if you like straddles or you like the strangles. And again, we're going to be mixing these up. We're going to be doing some short, some long. We're keeping them the same each week for the time being until we get all of them covered. All right, you guys, that's long strangles today. Appreciate you being here. Coming up next is going to be Barb Armstrong with Trading a Smaller Account. I know lots of you love that class. So stay tuned. We'll start that right at the top of the hour. And Brent, thanks for your help and our producer's help here today. All right, you guys have a great Monday, and we'll see you soon.